Hello, guys. We will record this this lesson because this live session because what we are going to see it's a little bit of more practice focus. We will see some videos. We will do the knowledge check, the previous knowledge check with the cash accounting and accrual accounting. I know that you are improving in knowing the accounting concepts better, which are what is a balance sheet, what are the components of a balance sheet, what is an income statement, what are the components, how do you differentiate an expense from an asset. I know that you are getting it, and I just need to know that you manage the difference between cash and accrual accounting, and that's it. Those are the basics to start analyzing financial statements. And I will show you how to get annual reports, the financial statements from public companies, and what you can do with those, what kind of analysis you can achieve with those, and that's it for the week. And we will end up the week with a quiz. Okay. The quiz is you have a due date until Sunday. You don't have homework for this week. So it's just a matter of having the knowledge check for the week, and that's it. Okay. Good to go. Perfect. So first thing is, do you have your Brightspace open? Let's start a little bit easy. Then we will raise the bar. Please open your Brightspace and let's go to lesson 1.3. We did the 1.2, but right now we will do lesson 1.3, 1.4, and that's it. So guys, can you put your video of lesson 1.3? We are speaking about the accounting standards. Perfect. First thing, guys, is go to annualreports.com. I put the link in the chat, and in here you can take a look at whatever company you want to. Tell me one. Let's do yours. Who can tell me a company? What do you want to take a look? Google, Facebook, a Formula One team. Tell me one, guys.
Oh, Mercedes.
What?
Mercedes.
Oh, but let's see what we can get. No, because Mercedes. What's the? Do you know the company name? Mercedes,
no.
Mercedes. Because it's not Mercedes, it's Daimler, no? Daimler.
Yeah, it's something like that.
Yeah. Auto manufacturers. Oh, yep. So guys, what you will find in the annual reports, it's not only financial information. Who can tell me why you submit annual reports? Or that contains the financial statement, but what's the importance of submitting annual reports?
For potential investors.
That's one, that's the main one. The second one, it's the only way to finance a company? Investors?
They give disclosure of a company's activity.
Yes. Okay, but investors, it's one of the targets, right? One, the main one. But that's not the only way to finance a company. Tell me another way to finance. Vitalin's financing is how do you finance the operations? One is equity, and the other one, the debt. It's very important to have financial information because your creditors, meaning banks and other institutions that submit loans, will ask for your financial reports. The first thing that they will do is go to your financial statements. Obviously, this is a public company. This is more elaborated. You don't have only, you have your financial statements, but also you have a letter from the CEO, the board of management. They will tell you all the strategy from the company, and then you move to the financial statements. You will have in here your CSR strategy, your corporate strategy, your corporate profile, basically all the information for the company. Okay, and here we can find the condensed income statement. Important thing, guys, at least to start reporting in IFRS, you need 3 years. This is a requirement. You can't start recording. Well, you can start recording by following IFRS. You can tell that to your accountant, but you're not able to submit an official financial statement because it requires at least to present 2 years in order to compare. So you have your balance sheet structure with assets, equity, liabilities, and you have 2 years. That's a requirement for IFRS. Okay, and as you might see, in financial statements, the income and the balance sheet are very small. You don't need to give a lot of content to the investors. And why I'm telling you that, because sometimes companies tend to open a huge income statement, and it doesn't comply with anything. So guys, why you will need to know how to find annual reports, how to read an income statement, a balance sheet? Well, you can start analyzing. I will show you the peers analysis. Now, are you seeing the ViajaClick group business case?
Yes.
Excellent. So guys, this is a financial projection. This is a financial statement, a P&A projected from 2021 and 4 years in the future. Okay. Let's see the elements of the income statement. You have your income, your revenues, your costs, and your expenses. Net profit, that's it. What's the important thing in here? By registering in accrual basis, as you might see, the net revenue, what is the net revenue? How do I get the net revenue? What's the calculation? The formula, income less cost, right? Good, okay. And this percentage is net is income less cost, gives me the net revenue, and the net revenue divided by the gross booking will give you this margin. It's just to represent how much you're earning from the gross booking. How much I'm looking to earn? Almost 10%. But the great thing in here, and this is the purpose of doing accrual basis of accounting, and this is the important message from IFRS, is that the accrual basis accounting gives you stability, gives you the opportunity to start have stable margins. Here you have that even that I'm increasing my earnings each year from 9.4 to 10.2. As you might see, the difference is not like material. It's giving you an stability. So what will happen if by the next forecast in 2026 this margin goes up to 20%? What do you think that will happen? Who can give me a conclusion from if I got in 2026 a margin of 20% when you have 9.4, 10.2, 10.7?
It will, the margin will increase.
Yes, but what conclusion you can get if from 2026 the margin goes up to 20%? What would you think? Tell me your reasoning
There were a lot of
process.
sales.
No, exactly no. That's one of the things that you have to. This is the reason why IFRS is great in order to analyze. More sales won't give you more margin. Why?
Oh, well, then you reduced your costs.
No, but more sales. What this is telling you is that in average, you're earning 10%. How you will forecast for 2026 a margin of the double that you are averaging from previous 5 years? Something strange would happen, no? The first thing that you need to do as a manager is to ask yourself, how did I get from 10% to 20%? Because an increase in sales won't affect your margin. Why it won't affect your margin? Because the formula is the same for as usual. You divide your net revenue against your gross booking. If you are earning always 10%, yes, one of the things that could happen is that, okay, maybe I diminished my costs. Okay, but 10%? And that's the main goal, guys. The main goal is you have a stabilization in your margins, you have a stabilization in your figures. You don't see, for example, what would happen if I buy a huge equipment? What would happen in an income statement? What if I want to buy a 5 million equipment in order to operate? Where this will be reflected in here? Who can tell me?
If you spend 5 million on what?
On an equipment. What is an equipment? Where should I register an equipment? Equipment or property plan and an equipment?
It's an asset, but I don't know.
Okay. Assets are part of the income statement?
It will be a cost.
No, assets are not a part of the income statement.
Balance sheet.
Are part of the balance sheet. Okay. That's the trick question. But the thing is, then should it affect my P&L, my income statement, buying a machine? Who can tell me?
No.
Thumbs up for the ones that think that it should affect. Why do you think that it will affect my machine, the P&L, the income statement?
Because you gotta register it as an expense, perhaps administrative. Or no? Okay.
We already decided that it is an asset. It is.
Yes,
Then
but it has to
how
be
did-
registered. When you buy it, you gotta register the buy.
What's the register for a fixed asset, guys? I pay it from the bank. Okay, credit, debit, asset, right? Are we good until here? But how the assets will affect my P&L then? How a fixed asset will affect my P&L?
I don't think it will. Because it is a profit and loss report, not a.
We haven't yet. I haven't yet discussed with you the concept of depreciation or amortization. Did you guys remember that from your previous classes, from your previous courses? The thing is that the assets have a long purpose or long-term purpose for your companies. You buy an asset because it will, you will use it for at least certain period of time, more than a year. It's more than 1 year. So for example, the example of our equipment, the way to affect the P&L is by a depreciation method. That the most common is the life usage depreciation method. That is, you divide in how many months you want to. Let's take the case of a building. How much time do you think a building you will use it until its value is 0? At least 20 years? Okay, so you take those 20 years, divide the value of the building in 20 years, and you get 20 years, but you can do it per each month if you want to register the depreciation for each month. But then you will apply the concept of receiving and delivering the service. Do you remember that from accrual basis, the most important thing is to give the service and receive the service in order to register it? Okay, until there we are okay. So then if the life usage of the building is for 20 years and one of those years already happened, then I will depreciate just 1 year of that building. That's the concept of depreciation amortization. Why do we apply that concept? Because it will allow you, in order to don't register the building in year 2021 when I buy it, that was what David was mentioning. Instead of doing that and affecting the P&L and the income statement for year 2021, where I probably will get huge losses, I better register it in the fixed assets and depreciate it each year, because the norm and the IFRS guidelines allows you to do that. And do you get the meaning of depreciation? The reason why is because then it will allow you to give a stabilization to your figures. As you might see, this net operating income from since years 2021 is like of the record year, because it's the first year. Usually those are kind of unstable figures, but as you can see, from 2022 onwards, you have a margin, operating margin of 3.4, 4.0, 4.8, 5.0. So you have stable figures. This allows you to forecast. You don't have figures as volatile as the stock market exchange that moves 30% from one day to the other. This is not your stock exchange class and your technical analysis class. IFRS and accrual accounting basis gives you the opportunity to stabilize, see, yeah, your figures, in order so you can apply economic or econometric methods or statistic methods in order to forecast the future and analyze the value of the company. And that's the purpose of the IFRS. That's the
So,
message.
teacher,
Yes, tell me, Andrea.
I got a little bit lost. What would happen with the building?
First thing, how you will register.
As debit?
Debit in what part of your financial statements? In which financial statement? Balance sheet. In which element of the balance sheet?
Assets.
Assets. Okay. Fixed or current assets?
Current.
Current or long-term assets?
Long term?
Yes, it's long-term. Your assets
Okay.
should be equipment with high value that you will. The definition per se is if it's more than 1 year, it's a long-term asset. It's if it's for use for more than 1 year, it's long-term asset. And it will help you because remember, assets are resources.
But what was its impact there?
We have the depreciation in here. Depreciation or amortization, it's almost the same concept. The only thing that amortization is for intangible assets. What is an intangible asset? Who can tell me an example of an intangible asset that it's not software?
Bank?
Intellectual property.
Intellectual property. Nice. Perfect. That's an asset. Okay. But how do you affect your income statement with that asset? Because at the end, like the building example, if you don't give maintenance to your building, for sure, after 20 years, it will go down to a value of 0.
Yeah.
So how you will affect that to your performance as a company? You will apply and another account that it's called a contra asset, that it's an asset but in negative, that it's called accumulated depreciation. And what that means is just to affect the expense level or the income statement depending on the life usage of the asset. That's the key concept, life usage of the asset. Now, are you getting it?
Yes.
If the building is for 20 years, you only will register the value of 1 year, and you will affect only the expenses for that year.
Okay.
Okay. How you
Okay,
will do
thank
it?
you,
If the building values 1,200, you will affect in 200. And if the life usage is for 12 years, you will affect 100 on the first year. That's
Okay.
That's it. Okay.
Okay. Thank you,
Because
teacher.
sometimes the depreciation concept, it gets very tricky, even for accountants, and but it's very easy. It's very easy. It's just to affect when it should be affecting the expense. But what does it mean? It allows you to give stabilization to your figures. Imagine if you affect the P&L just in the year that you bought the asset. Can you imagine me buying a building in this year? The performance of my company would go even to losses. That's the important thing. That's why we use accrual accounting. Okay, good. So what is the importance of knowing how to do annual reports? Now that you have your income statement, now that you guys know how to prepare an income statement, and that we will practice further in the class, you can start comparing your figures to your competitors. Now you can take a look of how really you are doing. So you can compare your gross bookings. And in here, there is a great example, because I went to the Despegar annual report, to Booking, to Expedia, from the page that I just sent you in the chat. And I compared how much they are earning in gross booking. Obviously, they are 1,000 times bigger than my company. But if you go to the margins and you start comparing costs and expenses and margins, now you can start applying conclusions, valuable conclusions to your figures. For example, let's see, gross booking against net revenue. This is the net revenue of all the companies. How do you think that I'm performing? ViajaClick, my company, against the biggest of the industry. What's your conclusion? Somebody? Gross booking are the net sales, and the net revenue, it's the bottom line. Profit against sales, it's only an easy equation. But what can you conclude from this analysis? Give me any conclusion.
I would say you're close to the industry average for the gross book and over net revenue.
But how you would consider it's a good performance, bad performance, close to the average? What does it mean?
Below average, but not extremely bad. I'd say decent, perhaps.
Okay, that's a valuable point of view. And the important thing in here is you're starting to creating your criteria. Now you can compare it to the industry. You can, okay, what if my value proposition is to be a cost leader? Cost leaders, like Walmart, their strategy is to lower their margins in order to sell, even if I don't have earnings. What that will allow me is to have production to suppliers, and I can show them, even if I didn't earn a dime, not even $1, but I can show the supplier, I sold 10,000 of your products. Give me a better rate for the next year, and then I will start earning. That is a type of a strategy. But then, if I'm a cost leader, that is what is ViajaClick, having a average profitability, it's very valuable. Even if you're a cost leader, you're having an average profitability. Very nice. And you can start analyzing these kind of issues with the gross bookings, with the EBITDA. We will get to that part, but I wanted to show you this is a good example of application. And obviously the kind of analysis that you will do in order to generate valuable conclusions for your board of directors, managers, etc. Okay. So now you know how to get annual reports. You know what kind of analysis you can do. This is a peers analysis. It's called. We will do it further in the course. And you know the importance of the IFRS, because the important message is it stabilizes. You don't have it doesn't. It's not volatile. It gives you stability. It's flat in order so you can evaluate and project future trends of your figures. So let's move further to the next video, that it's the importance of finance.
Teacher, sorry, just a little question.
Oh yeah, sorry. Questions
so-
regarding this besides the Android one? Sorry, let's do the Q&A.
Okay, sorry. So the margin, it's like the percentage of profit that comes from the revenue, right?
Yes.
Okay. Thank you.
Very good, very good. We haven't get to that. Huh? We will see it, but you're moving on further. Another question, guys. So first thing, when you receive a financial statement, first question you have to ask, in what language we need to read it? IFRS, okay, perfect. Now you are on an accurate basis of accounting. So next video, any questions until here? Did you got the depreciation concept? It was not meant for this class, but did you get it? Good, very good, excellent. How are your grades, huh? Who is a thumbs up? Who is above 9 or 90%? I don't know. It's nice, very smart guys. But in here we have to have more than 80%, right? In order to approve the course.
What?
Just kidding, guys. Just kidding.
Grades? Can do we have grades already?
Yes. But the ones that count is it's just the homeworks. We have grades for the quizzes and the knowledge check, but those aren't going to be on a grading perspective. Midterm, an exam, it values 50%. Our department requested that. Sorry, guys, I couldn't help you with that, but I helped you with the 50%, the other 50% that we'll do a capstone project. I want you to do an income statement. Sad faces. I want you to do an income statement as a capstone project for this course. And I think the value is 16%. Obviously, I want you to do it in Teams and expose it with valuable conclusions. That's the final project, and the homeworks each week. Starting since for the following week, we have the first homework, and as I told you, the homeworks will be very easy, guys. I don't want you to stress out for the homeworks. Just it's to reinforce the knowledge. Okay. Not sad faces right now. Well, you will do it fine. You're getting it very, very nice. So let's do the lesson 1.4. I did an interview with, it is even a teacher from Anahuac. I don't know if you know her. It's Claudia Mañón. Okay.
No.
Yes, because you are international business students in English. She gives courses in Spanish. But let's watch the video and then we move on to the practical exercise, okay? Good luck, guys. Okay, so we have register until here. On December 1st, 2021, company C pays company 30,000 for services to be performed in January 2022. How we will register that? Who can tell me? I will give you an extrinsic incentive, guys. Extra points, no, for for the one who participates. Come on, please. Next register.
Income.
Company said income when?
December 1st.
You have 2 dates. Okay, December 1st and January 2022. No.
Yes.
So the first register is company pays company C pays company X 30,000. So
Bank,
Income.
okay, bank, perfect, bank, debit, and everybody's telling me income. Do you remember accurate basis of accounting? What's the first question you have to ask? Do you remember the service trading until I receive or give the service?
will it be accounts payable?
Yes, accounts payable, yeah. Why? Why it's an accounts payable?
Because they have already paid you, but you haven't done the service, so you owe the service.
Boom, that's the difference. Excellent. Ace it. And when you record the income? When you give it, no? That's why you have that's why you have the other date. What you will do, it's debit your accounts payable, that it's a credit nature. You zero it because you already gave the service, and then you have the income. Which is the nature of the income? Credit. Now you owe the investor those 30,000, but until January 1st of 2022. On January 1st, 2021, company X paid 40,000 for the next 2 years rent. We apply the same concept. Who can tell me the register?
Prepaid rent. And bank.
Excellent. Prepaid rent versus bank. Perfect. But that's it?
You debit prepaid rent and debit bank, no credit.
Okay, let's do it until the final day in order to report. Okay, so you have prepaid rent for 40,000 and bank for 40,000. Okay, as you said, you will credit prepaid rent how much? $20,000. Why? Why are
Because you're only paying 1/2. You pay 2 years, 40,000. 40 divided by 2 is 20.
That's why it was important, this exercise. In 2021, company X also incurred in a salary expense of 30,000. What's the register, please? Accounting register for salaries. Arturo?
Don't remember.
Administrative expense.
Administrative expense.
Okay, but we can do it. We can call it salary expense. No worries. Don't worry about the name, but at the end it's an expense. Salary 30,000. Credit or debit? Nature
Debit.
of expenses. Perfect. Debit.
Debit.
And where should I credit? What's the credit, guys?
30. Bank. Sorry.
Yeah. So we have all the information in here. So what we'll do? Do you know how to use Excel?
Yes.
Yes. Do you?
I know.
But kind of, or good
I mean,
level?
that's the only thing we saw in accounting for the last 2 accounting courses.
Okay. Okay. Sorry. I missed so we can do you remember what's the final result of a trial balance in accounting or a balance sheet? Zero. So what I'm doing is just extracting. You didn't have to need to do this. You could do it manually, but I'm just showing you in order for you to apply Excel, because it is important for you. Lots of reports will come for you in Excel basis. So as you might see, bank account is it's an element of what financial statement? Guys?
Balance sheet.
Balance sheet, perfect. Account receivable?
Same.
Accounts payable?
Balance sheet.
But what is an asset or what element?
Liability.
Liability, perfect. And the income?
Income statement.
From the income statement, perfect. Yes, and it's part of the equity, okay? Perfect. So what I did, it's take out our operations from 2022. And in here, you have, if we adopt this income statement elements, we end up with what's the amount of, oh, wait, salary expense. Something's wrong in here, guys. I didn't get to the answer. What happened in here? Company X also including a salary of 30,000. Yes, 70,000. Company X perform services to be performed in January 2022. Those 30,000. Okay, sorry guys, prepaid rent, it's not an income statement account, it's a balance sheet. Sorry. It's an asset. So I got my income, rent, and expenses. So I got 2 minus 20,000, which means it's a positive or negative. It's a profit or a loss.
Profit, because it is credit.
What was the answer? 20,000. Did you got it? Are we okay? Did you see where did you get it wrong in your exercises?
In my answer, I put 20,000, but between parentheses.
But why?
I mean, no, because I thought 70,000, so then I did minus 20 minus 30, you know?
Okay.
So if it's negative 70K, then
Remember,
I thought it would be 20K.
remember that for presentation purposes, only for presentation purposes, because at the end, you're watching real accounting in here. Real accounting meaning that you will balance to 0, and this is an actual way of registering. But remember that for presentation purposes, in the income statement, you change signs in order for you to don't present profitabilities in negative. Because
okay,
you can confuse the investor. You're winning, but it's in negative. They think you are losing. It's only for presentation purposes. But at the end,
yeah.
what I wanted you is to compare what you did to the actual exercise and how it gets done. Until here, questions? Are we okay? Are we good to go with the quiz of the week? Fine, Emilio?
Right now?
No. You have until
Okay.
Sunday.
Okay.
Could you share this Excel, please?
Okay. But don't learn the Excel. Learn how to do it.
Yeah, yes.
Okay. But in here, please, did anybody got it wrong? Or did you compare what you did and do you need to reinforce any concept? Because for sure the quiz will have an exercise like this.
I feel, I don't know, it's like my personal opinion that I start getting it better when I practice. So I wouldn't like to say leave us homework because that wouldn't be fair for anyone that doesn't want homework. But I would like to practice a little bit more.
Yes, no, it's not it won't be homework per se, but you have a quiz to solve.
Okay.
Okay, and the quiz will get an exercise like this. I need you, and the reason why it's that I need you to have very reinforced these basic concepts in order to move on to ratio analysis, firm valuation. Okay.
Oh, I have one question about the quiz. Will the quiz also include questions like the one of which of the following is not true regarding accuracy of accounting?
Yes.
Like those type of questions?
Yes.
Okay.
I need to check that this week's concepts are very clear for you. I won't ask, okay, maybe I give you one question regarding IFRS, but only what is IFRS? No? Or why will we use it?
And teacher, the grade we get goes to like our real grade, right?
No. Quizzes are only a pass or fail grade in order for me to start noticing if there are mislack or mislead on the concepts I need you to learn from each week. But it's obligatory to do them. Obviously, if you get it all wrong, I will be on your back questioning why you're getting it wrong. Okay. Perfect. The ones that they have value are the homework, but this week we won't have any. We start next week with the homeworks, and we start with chapter 1 from the book. So these were 2 weeks of introductory lessons because the book starts with ratio analysis. Let's go deep into analysis. Okay. That's why I give a little bit of introductory week, but okay. So thank you guys. Thank you. Please tell me if you have any doubts regarding the quiz, if you need to message me or something else. And I hope you got it right now with the exercise that we did. So thank you. Is there any more questions, Q&A? No? Perfect. Have an excellent day and see you tomorrow in managerial accounting.
Thank you very much. See you.
Bye.
Bye-bye.